there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to discuss the huge week ahead of us, all the key events which potentially could move the market and what we need to look out for. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So I'm calling this week the FOMC week, because let's face it, that is the big event this week. But before we get to the FOMC, we have a number of other events ahead of us first. And it is a big week. It is extremely big week. We've already had early hours this morning, the Bank of Japan's GDP. So let's see what else we've got installed for the market. On Tuesday, we have the UK claimant count, which is due at 6 a.m. UTC. For those who are new to trading, UK claimant count is basically the UK equivalent to the US initial jobless claims. In other words, it's the number of new people signing on for unemployment benefits for the first time. So that's quite a big thing, especially because the UK economy currently is under a lot of scrutiny at the moment. So it'd be quite interesting to keep a close eye on this announcement and obviously the reaction of the sterling. At the same time, on the same day, we have UK unemployment rate, which is due at 6 a.m. UTC. Expectation of that is to come in the same at 3.8%. But it'd be interesting to watch that, because like I say, the UK at the moment is under the microscope, especially what the Bank of England said several weeks ago. And obviously the disappointing, but better than expected, but still negative UK GDP we had on Friday. So that's going to be interesting to keep an eye on. But on that day as well, on Tuesday, it's a busy day, Tuesday, we have Canadian CPI, Consumer Price Index. That's due at 12:30 p.m. UTC. And at the same time, we have US house starts, which is due at 12:30 p.m. UTC. Now, house starts basically is the number of new buildings, how many family homes and family buildings being built. So that's going to be really, really fascinating to watch. The expectation of that is 1.55 million. The previous number is 1.55.9 million. Now, the reason why I think the housing market is a story waiting to happen, because obviously we're focused a lot. Sorry, my throat's a bit dry. We're focused a lot on obviously the Fed's aggressive nature to interest rates and the danger of it slipping the US into a recession because they think the market can't handle high interest rates. But there's another factor people are not really talking about at the moment, and that is the housing industry in the UK. If you think about it, if you raise interest rates, okay, which the Fed is doing quite aggressively, then it means mortgages are more expensive. It costs more to pay your mortgages. So how that's affecting the housing market is, it's going to be a story in the future, which is really going to develop. And don't forget, the last time the US had a big housing crisis, I'm not saying they're in a housing crisis at the moment, but it'd be interesting to keep an eye to see if there's any indications that they may be slipping into a housing crisis. The last time they had a big housing crisis was the beginning of the credit crisis in 2008. So again, interesting story to keep an eye on. So that's US housing starts. On Wednesday, now this is the big day. Wednesday, we have UK Consumer Price Index due at 6 a.m. UTC. Currently, it's at 9.4%. The question is, will we see it hit double digits? Double digits. Don't forget, the Bank of England expect inflation to go to 13.3% by October. Will we see UK CPI actually go to double digits? So that's going to be a really exciting event to watch. And at 9 a.m. UTC, we have EU gross domestic product. I told you Wednesday's a big day. Gross domestic product due at 9 a.m. UTC. On the same day, about a couple of hours later, we have US retail sales month on month due at 12:30 p.m. UTC. Expectation is for it to come at 0.1%. The previous reading was 1%. So 0.1% is the expectation. So slow down in retail sales. And don't forget, the modern day economy, it's all based on us spending our money, what we're buying. So it's be quite interesting to see that number on that Wednesday. But then, drum roll, please. Then we have the big one, which of course is the FOMC minutes due at 6 p.m. UTC. Now, obviously, these are the minutes of their decision they made 3 weeks ago. And we all know what they did. They raised interest rates by 75 basis points. We know what they did. But the reason why this is the big one is, A, for one, you get to see the votes, how many people voted for 75, who voted for 50, who maybe even voted for 100. Plus, the reason why the market is obsessed with the FOMC minutes is because it gives the market hints of what the Fed may do next, if they're bullish, if they're hawkish, if they're aggressive. So this is going to be a big one. Don't forget, when they did their interest rate decision a couple of weeks ago, the monetary statement came out at the same time and the press conference, and the market took it as being dovish, which I think was wrong. It was a little bit dovish, but I also thought there was a lot of hawkish comments. So it'd be interesting to see what the minutes says and how the market takes to it. I probably might do a special watch along for this, because this is the big event. It's the FOMC minutes. I probably have to do it from home. Again, like I did for the interest rate decision. But still, I think this is going to be a real potential barn burner. So, put that down in your diary. Write it down now. FOMC minutes due 6 p.m. UTC. And then Thursday, keeping with inflation. Inflation is the word after all. We have EU CPI due at 9 a.m. UTC. And then at 12:30 p.m. UTC, we have US initial claims. Don't forget, I do look at initial claims a lot. I know it's a weekly indicator. I know it's a medium, but I like to keep an eye on it because I like to see it as a early warning system to how the state of the US economy is. And then Friday, we've got two big events happening on Friday. One is the UK retail sales due at 6 a.m. UTC. So it'd be nice to see the general confidence of the UK consumer. And then on Friday, not market related, but on Friday, we're going to have the very first episode of a brand new Tixee Live series called #AskJames. #AskJames. These little videos are going to be for education, and they will focus on the topics that you find people choose. Okay, remember, like I always say, if you have an idea for a topic or something you want to learn, just simply put in the comments on Facebook or YouTube, #AskJames and the topic. So this is our very first episode on Friday. Very first episode. The suggestion has come in from a frequent viewer, SMF790, and their suggestion is for me to explain market jargon. So on Friday, the 19th of August, I will be doing the very first episode of #AskJames. Okay, and that's going to be purely focused, purely educational. Not going to talk about the market so much. We talk about relation to the markets, but it's going to be purely focused on what market jargon is. I will explain what market jargon is, i.e., what is a bull, what is a bear, what does it mean to be hawkish, or what does it mean to be dovish, etc., everything. Because like every industry, the financial industry has its secret language, and sometimes it's in your benefit to understand these terminologies and these words. So I will be doing the very first episode, #AskJames, and on that episode I'll be doing explanations of market jargon. So please come and join me on Friday, the 19th of August. It should be really interesting. We've already got another topic for the following week, which is to explain or educate about candlesticks. That was from a Jay Davis, so that's next week. But this week, we're doing market jargon. Thank you so much for the suggestion, SMF790. And like I say, if you have ideas for topics in the future, just simply put it in the comment section on YouTube and Facebook, and we'll do a special #AskJames video just for that topic. So anyway, there we go. Big week, very big week. Like I say, UK claimant count, UK unemployment Canadian CPI, US house starts, EU GDP, US retail sales, FOMC minutes, EU CPI, US initial claims, UK retail sales, and the very first episode of hashtag Ask James. Don't forget, I'll be back online again tomorrow at 8 a.m. UTC and again tomorrow at 2 p.m. UTC. So please come and join me for that. Now, don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this video, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and you put up with me, my over-the-top enthusiasm and excitement about the market, which I simply just can't help because I love the markets, give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.